Well, hi, everybody. I want to thank you for joining us today for our video, our meeting on reverse mortgages. And I have with, first of all, I'm Ingrid Pierson and not Tim Wesley. So, yeah. And I'll remind you as we move through, so you remember that I'm Ingrid. And my guests are Kyle Ridenour and Cheryl Foley from Guild Mortgage. And they're going to bring us the facts and the details about purchasing your home using a reverse mortgage, because it opens awesome opportunities.
It does.
Okay, so let's go.
Let's do it.
Okay. Well, hi, everybody. Thanks for joining us. My name is Kyle Ridenour. I've been specializing in reverse mortgages for about 12 years now. And me and Cheryl, we work together on the reverse mortgage side of things here at Guild Mortgage. And today we're going to be discussing the reverse mortgage for purchase program primarily. The federally insured reverse mortgage, known as the home equity conversion mortgage, has been around since the late 80s. And there's two main types of reverse mortgages that you can do from that program. You can do the refi option, which is where you live in your property, your primary residence, and you can tap into your equity and never have to make a monthly mortgage payment. Today, we're going to be focusing more on the purchase option, option number 2, which is where you buy a home with a reverse mortgage loan and you live in your, let's call it your forever home, the home that you want to live in primarily, and you don't have to make a monthly mortgage payment. So we're delighted we could be here today to answer any questions and just go over how the program works and educate a lot of homeowners on how this could possibly work for them if they're over the age of 62. So I'll let Cheryl talk a little bit now about herself and introduce herself as well.
Well, hello, I'm Cheryl Foley. I'm with Guild Mortgage, and I do both reverse and forward mortgages. I did my first reverse mortgage probably 15 years ago, but it's been a span of time since I've been doing them on a regular basis. But I did it for my aunt years ago. It was a marvelous product. It allowed her to stay in her home. We were actually doing it as reverse refinance so that she could stay in her home. So I've been with Guild and previously with Vitech before that. I've been in the mortgage business for about 20 years. And I love doing the reverse mortgages. I think it's an amazing product that allows people to buy a better home frequently, because you can put your down payment in there and then have no mortgage payment at all, where if you were limited to just the down payment that you could use, frequently that doesn't allow you to buy that dream home that you want to buy. So this is a way to be able to grade up a little bit and buy a nicer home. And I know Ingrid can find you one.
Thank you. And now that my speakers have introduced themselves, let me give you a little bit of background on me. If you don't already know me, that I was licensed in the late 70s as a realtor, worked in lending for 23 years, 4 years, almost 5 years in escrow before that. So I've kind of come way around, and during my time as a lender, I also did some work with reverse mortgages with Vitech, where I was working with Cheryl. And that's one of the reasons I asked them to join me today, because even though there's so many commercials on TV, all these big personalities talking about, oh, get a reverse mortgage, we don't have time. We just can't ask those questions that we have. And here, they're going to bring that program to us, to you. I'm going to ask some clarifying questions that I think you guys might have. And and later you'll have contact information. So if you have additional questions, feel free to do so.
Okay, so everybody can see the reverse mortgage for purchase guide. So this is a nice informative piece that our companies come up with here that lays out the benefits and the requirements of the reverse mortgage for purchase. So we're going to stay on this guide and go through it each page. We might get away from sharing the screen the whole time. This way Ingrid we can have like open discussion and she can ask questions. But with that being said, we'll go ahead and get started on the first few pages here.
So obviously, what are the benefits? The benefits of a purchase, using a reverse mortgage for a purchase.
Right. So the benefits, that's a great question, Ingrid. The benefits of the reverse mortgage, whether you do the purchase or the refinance, the number one benefit is always going to be that you never have to make a monthly mortgage payment. So this particular mortgage is going to allow you to live mortgage payment free. It's going to free up more cash flow for you in your retirement years. And if you're on a fixed income, it is really the perfect loan for a lot of retirees. So that's the number one benefit, I would say, is always going to be never have to make a monthly mortgage payment. Number two is easier qualifications for this particular loan. Because you're not making the mortgage payment like you would on a forward mortgage. Cheryl can attest to this. There's quite a few qualifying factors on a forward mortgage and a lot of requirements you have to meet and proof of income and proof of your down payment. Well, this program is a little bit more simplified. You just have to show you have enough income to cover your property charges. Those would be your property taxes, homeowners insurance, and HOA dues. The other nice piece about this program is since it is insured by the Federal Housing Administration and the Department of Housing and Urban Development, they've really legitimized this program over the last 30 or 40 years and strengthened it to make it very safe for the consumer. It's probably the safest loan out there, but it has very competitive interest rates. So what you'll see on regular mortgages that you might have a mortgage payment on, you're going to see very similar interest rates and fees on the reverse mortgage. And then flexibility to make a mortgage payment. So there is no prepayment penalty. With a reverse mortgage, you still own the property, you're on the title or the deed, and you can pay this down at any time or pay it off if you ever wanted to. So there's just a lot more flexibility with reverse mortgages. And then the lower down payment requirement for someone who is going to want to try to buy home cash so they don't have a mortgage payment. They might be stretching it and pulling all their liquid assets. So this can help you get into a home by putting down closer to 50% down versus full cash buy. And then you can always refinance this if the loan terms get better, just like you would on any other mortgage. So this is a way just again to buy your new primary residence. And you never have to pay this back until you you've passed on or you decide to sell the home. Or if you move out into like a full, healthcare facility full time for health benefits, then you would have to look at selling the home to pay back the reverse mortgage. And then Cheryl can talk a little bit about the example here about, why people do it and what the benefit is for someone looking to do the purchase.
Well, what I found is the greatest benefit is that you really can purchase a much nicer home than if you have to make that monthly mortgage payment. So, you can put $400,000 down on an $800,000 home and have no mortgage payment, or you can put $400,000 on a $400,000 home because you want to be able to have no payment. So it just allows you to buy so much nicer home because you're not required to have that full cash investment. And I think what Kyle referenced too is that if you say you had $800,000 out of your previous home, rather than taking that whole $800,000 and investing it in just one vehicle, it allows you to take part of your assets invested in the purchase of your home and have another $400,000 to invest in other ways, possibly an investment property or any kind of investment accounts, or maybe just to play, because I think as we get a little bit older, it's really nice for us not to have the house own us. We want a lovely home to live in, but we still want to have some reserve money that we can go and spend time with our friends or travel or see our grandchildren or whatever. It just frees that asset up to allow you to still have money to live a beautiful life in your golden years.
Right. And tell me, Kyle, since the loan increases because of the interest There, people always ask, well, about an inheritance for my kids, will there still be an inheritance?
You want my input on that? I think if you're strapped when you're older and you've worked your entire life and saved your money, that you should be able to utilize that money. Will you have an inheritance still for your children? Houses appreciate every year automatically. I mean, certainly there are times when we have a downward market, but overall, if you look historically, we have a 4 to 6% appreciation every year in properties. So even though you are utilizing some of the equity that you have in that home, you're replacing it with the equity growth from own property. So it really is a pretty good trade-off, a pretty good balancing. But I also feel that if the kids feel like you shouldn't do a reverse mortgage because they want that inheritance, then maybe they should pay the mortgage payment for you. Because I don't think that as a senior, you should have to struggle with living month to month. You should you should be able to utilize your own assets that you have saved and worked your entire life for.
Yeah.
The kids can earn theirs.
Yeah. And I'll just touch on that is it really comes down to giving the homeowner peace of mind. So it's not necessarily about what this is going to do for the kids, Ingrid. It's about how this is going to help the homeowner live a comfortable retirement life. And this is a non-recourse loan. So we'll talk about this a little bit more in the guide. But the biggest benefit of the reverse mortgage is not making the mortgage payment and not having to worry about if the loan balance grows over time, if it exceeds the value of the home. The FHA will insure the loan and guarantee the loan if that situation happens. But Cheryl mentioned a good point is that the home appreciates about 4% a year. So there should be quite a bit of equity depending on the time frame that somebody lives in the home with the reverse mortgage. But if there was nothing left for the kids or a smaller amount than if they did a conventional mortgage, we've noticed a lot of the kids are just happier that their parents live comfortably. So that's why we're here to explain that this is really helping the homeowner live a real comfortable life and still not negatively affect the kids because of the non-recourse.
Right. And one of my reasons for bringing you here is because there are many seniors that need to make a change. They're 2-story homes, and I can speak to that when you have a medical situation and wheelchairs. That's not the time to find out that you've got a problem with the stairs.
Yeah.
And since many people have no payment or a very low payment because they've been there so long, the reverse mortgage would be the key instrument to making that move happen.
Absolutely.
And whether downsizing in the house or downsizing on the land.
Right.
You can still find a really nice home to move into with or using a reverse mortgage.
Absolutely.
Without a lot of payment shock for yourself, budgetary shock.
As in none. Because you're paying taxes and insurance, no matter where you live, you're paying taxes and insurance. And that's all you have to pay with the reverse mortgage is the taxes and insurance, and then the HOA if you choose to live with it. It's an association. But it's the same cost basically to you that you have in owning any kind of a home.
Well said.
And just like the quote here on this particular slide we're showing, Scott S., he can attest to it, is he sold his previous home and used the proceeds to make the down payment on the new home to get into the reverse mortgage loan, and was able to buy a new build and do upgrades and things that possibly he wouldn't be able to if he put even every last dollar he had into the home. Now he can afford it with the reverse for purchase. So Ingrid, you're right. It's downsizing. It's buying the home of your dreams. You're an empty nester, moving on from your current home and just getting into the right fit.
So how long can you be out of your home?
2 years.
Yeah, that's a great question.
Up to a year? Okay.
The main rule is that it's your primary residence, so you have to live in the home primarily out of the year, even if you own other properties like a secondary home or vacation properties. But if you're out of the home for medical reasons later in life, you can be out of the home for up to 12 months in like a rehab facility, let's say, for example.
Yeah.
At that time frame, if it exceeds over a year, then you would contact the reverse mortgage lender or servicer and let them know that your plans are to probably stay full-time in the facility. So you'd want to look at selling the home to repay the reverse mortgage. So that's the most common way that a reverse mortgage is repaid, is you sell the home that it's on and the loan's paid off, and any extra proceeds go to the homeowner if they're still alive, or their heirs if the heirs are selling it for them.
Yeah. So, but if you've got a very active homeowner and they have their reverse mortgage, then they can go on vacation for.
Oh, yeah.
They could travel 6 times, 11 months every
Yeah.
year, as long as this is their primary residence that they're coming back to.
Yeah.
That's the criteria, is that it be your primary residence.
Yeah. And we say that as long as they live in the home half of the year, but really you're going to always have one home that you designate as your primary residence. If you have this home that's the largest property and you have a condo in San Diego, you can spend as much time as you want in the condo, but you just have to get back to your, primary residence throughout the year.
Let's see then, what about qualifying criteria?
Qualifying is actually very easy with this loan.
Mhm.
One of the borrowers has to be at least 62 years old. Obviously, the older you are, the less money you'd have to put down, because there's an actuarial charge. And so obviously we have a certain life expectancy.
Right.
So, but one of you has to be 62. And the home being purchased does have to be your primary residence. You do have to show that you can pay the property taxes and the insurance and the homeowner's dues. You look at basic income for qualifying, so just enough to show that you can do that. They like a little residual income. They don't want, if you had $800 a month coming in and you had $800 going out for property taxes and insurance, that might not be a very comfortable lifestyle for you. So they do look there. It's a loan that wants to protect the consumer. Actually, all of our loans today are really geared to protect the consumer, not to let them get in a position, as I said earlier, where the house owns you and you have to struggle with every other aspect of living. So that's not the goal. You have to go through HUD counseling, and that is one of the most important pieces. Before you can actually take an application, we would connect you with a whole group and you choose which HUD counselor you want to go to. But it's very important to have an independent third party that you feel very safe and comfortable with, that you know is authorized by HUD, to be able to ask all of those questions. We would go through a booklet like this. We'd prepare a quote for you. You could take that then to the HUD counselor, and they could review everything that we've talked with you about, so that you're very, very comfortable with the process. Okay.
So Cheryl, for our listeners who don't know what HUD means.
Housing Urban Development.
Okay.
It's a big old government agency that is there to protect the consumers.
And they're also the ones that oversee regular FHA loans.
Yes.
Correct?
Yes.
The forward mortgages.
Yes.
Okay.
Yeah.
All right. Okay.
FHA and HUD are the same government agency, if you will, and when it comes to housing, and they're the ones who insure the reverse mortgage.
Okay. Great.
And then do you want to talk about if the purchase is over $1 million? Because sometimes there's some different criteria then.
Yeah, definitely. So we do have some other options as well. The FHA product that we're talking about is referred to as the home equity conversion mortgage. That has a home value limit of $1,089,300. So anything over that particular value, 1.1 million, 1.5 million and up, we have an alternative reverse mortgage. And it actually is a nice niche product because the age requirement is lower. It's as low as age 55. So there's a little market there. It is commonly referred to as a jumbo reverse mortgage, but it will have a lot of the same requirements as the FHA and HUD product. They're going to mirror the same guidelines, the same qualifying factors. Again, the easier qualifications than a conventional mortgage. The fixed rates are going to be a little bit higher. So are the adjustable rates, again, because this is a jumbo product. But as long as it's an FHA approved property, it's going to qualify for both programs, meaning a single family up to a 4-unit property. You have condominiums, you have townhomes, and even mobile homes that you own the land. It built after 1976 on a permanent foundation. So if it meets FHA guidelines, essentially it's going to meet these proprietary products. Now, these aren't FHA insured, but they're the same reverse mortgage lenders. They actually take the risk. So still going to be non-recourse, meaning you still won't owe more than the home is worth at any time. It can negatively affect you if that happens or your heirs. So we really like these programs for, up in the foothills, bigger properties, bigger lots that maybe exceed that million value range. And the Bay Area, things getting out towards the Bay Area, Fairfield, Vallejo. We see a lot of people, they actually feel restricted if they live in Sacramento, not thinking they can move to their family members and friends in the Bay Area. But if you have 500,000 you can walk away with after selling your home, you can now buy close to $1 million or a little more in the closer to the Bay Area, so you can get closer to family and friends. So that's a nice benefit of this program.
So I think what you stated was so important, that you could sell a home for $500,000 and turn around and buy a home for $1 million, depending on your age, obviously. But to be able to buy that home in the area that you want to be in. And the other thing is that you have to remember that when you're over 55, you can now transfer your tax bases throughout California.
Yes.
And that's a huge component as well, because you sell a house for $500,000 that you paid $100,000 for, and you're paying a tax basis on that $100,000. You buy $1 million house, you can transfer the $500,000 over, and then you're going to have a true up between the sale price of your initial home and the home that you purchased. But that still is going to have taxes considerably less than what they would be if you were just buying $1 million property and not able to transfer the tax basis. So it's another important consideration for anyone over 55 is looking at what that transfer of tax basis is going to mean to you.
Yeah,
absolutely.
That's
Absolutely.
huge.
That's a great point.
And utilizing the reverse mortgage makes it so much more feasible. You could do that, transfer the tax basis and do the true up without a reverse mortgage.
True.
But the benefits of using the reverse mortgage allow you to buy that more expensive property.
Absolutely.
Right.
And at lower taxes, because that's one of the few charges you're going to have. That's a huge benefit.
Yeah.
For the homeowner.
So I like that one.
Yeah.
Not that the other thing I wanted to point out too, it's 1 to 4 units. So say you bought $1 million fourplex and you lived in one of the unit, you could actually create income from what you buy. So that's another consideration with a reverse mortgage, that you could be mortgage payment free, and you could be creating an income stream for yourself by buying a 1 to 4, a 2 or 3 or 4 unit property.
Yeah, that's
So
awesome. That is really amazing.
I mean, it's the perfect thing for a senior to do, is to be able to buy something that's multiple units and create an additional income stream.
Yeah. So like I mentioned, it's a great benefit, especially for homeowners as young as 55 to take advantage of the reverse mortgage. So if you want to start your retirement earlier, here's your product. Again, if the interest rate's a little bit higher, that's not going to really, you're not going to really feel it because you're not making a monthly mortgage payment. So it's just a great way to shut your mortgage payment off as early as age 55 if you take advantage of this program. Also, since it's not FHA insured, you don't have mortgage insurance. So when you look at an FHA mortgage or the federally insured reverse mortgage, the HECM, we call it, there is upfront mortgage insurance, 2% as part of the appraised value of the home. That's part of the closing cost. And you have ongoing mortgage insurance of 0.5%. You're not charged either of those on this proprietary product. So although the interest rate may be a little higher, you're going to see a lot lower closing costs and a lower, there's no mortgage insurance annually. So that's a big benefit why people like to choose this as a lower cost option as well. But if you have no prepayment penalties, You can do this loan and you can pay it back. You can pay down a little bit at a time. You can make 0 payments. It's totally up to the homeowner. So again, just more flexibility, opens up another market of somebody aged 55 to 62 that wouldn't be eligible for this with the federally insured product.
Now with that, with the lower age, then the loan to value would be lower too, correct?
You would have to
That's
have,
right.
you would have a larger cash investment
Mhm.
Right.
than that,
Okay.
because obviously you're going to live a lot longer.
Yes.
So
Yeah.
you would
Yeah.
have
Yeah.
well, yes, we would certainly hope.
Yeah, the lending limits, we'll get into this a little bit
Okay.
later on in the guide, but it explains how the calculation takes place to see how much a homeowner is eligible for with the reverse mortgage loan amount. And so it starts at the lowest the younger you are, and it goes up from there. So FHA and even these jumbo products, they don't want to lend too much because there has to be room there for equity for the heirs one day, and room for the loan to be repaid. So that's one of the changes they've made over the years. Is it's a little bit more conservative loan, but it's also safer because it's giving homeowners more equity when they sell, if they have to move on to that care facility later in life, or their kids can get some more equity because they lend less upfront. But that's a great question. The younger you are, yes, the lower you get, because it's an actuarial, like Cheryl mentioned, on life expectancies.
Well, the reverse refinance is an excellent product for people that want to stay in their home and just do not want to have a mortgage payment anymore. Because as you said, usually by this time, someone's in their 70s or in their 60s, they've lived in their home for 20 years. And so they really don't owe very much on it anymore. And they have a lot of equity sitting there. And a lot of people are struggling.
Yeah.
And they need to be able to tap into that equity.
Right.
And the qualifying is so much easier than having to go out and get like a home equity line of credit through a bank or something like that, where you have much higher qualifying criteria. This way, you can stay in your home. You can get a monthly payment if you choose. You can set up a home equity line of credit because you need a new roof. You don't have to worry that you have to go to the kids to ask them when you need that extra $10 or $15 or $20,000. You can set it up so that you have a line of credit sitting there to meet those unexpected expenses. And homeowners all know houses have unexpected expenses, always. So, but I just like that you're freeing up the monies for you to be able to live your life and live it comfortably. I think that's one of the best aspects of this program.
Yeah, and getting back to the refinance is quite a few people that did the reverse purchase in the last 3 or 4 years. They're refinancing now because although the interest rates have gone up, the values have gone up tremendously. So they're able to refinance after they buy the home with the reverse mortgage. They live there for the 3 years with no mortgage payment, and then they can pull more of the equity out with the refi. And that's just extra money that they can use. Again, no mortgage payment, and maybe help them pull some of that money back out that they put in originally for the down payment. Now they're going to use to upgrade their home and make it, the way they want to retire in it. So,
and Kyle, just a quick question. Can you use that proprietary product for either a refinance or a purchase?
Yeah, great question, Cheryl. You can use it for both. So just like the federally insured product, you can do the purchase or the refinance on the proprietary jumbo reverse mortgage. So it's, again, these are products that have come into the market just in the last few years, the proprietaries, and it's great opportunity for a lot of people who are younger or have higher home values. So
there are some differences in the contract. So that's an important piece of it, is that you always have to have an FHA, a mandatory clause, if you're doing a HECM, if you're doing using that federally insured product, just like you would on a forward mortgage, you have to have the FHA mandatory clause. And you can pay all ordinary and customary fees. The things that are a little different is that with a forward mortgage, you can have lender credits and you can have seller credits. But with the reverse mortgage, those are not allowed. So you are covering those costs that you would normally have and without any kind of credits from lenders or sellers. If you're buying new construction, they appraise it when the home is 90% complete. And then of course you have to have a certificate of occupancy before you can close the loan. But a lot of times when you're buying a new home, you will find that they will offer you credits as incentive, and that could be problematic with this product, that they don't allow those incentives.
But keep in mind, one other important detail on this is if there are repairs that are deemed health and safety, that would be listed on the FHA appraisal, okay, not the inspection report, that's totally separate. But if the appraiser puts in there that there's certain things that need to be addressed, those do have to be fixed by the seller, okay, prior to closing. So keep that in mind, that if a home does have quite a bit of work to it, let's call it closer to a fixer-upper, this probably isn't the loan program for the homeowner, so we want you to know that here's some of the requirements and guidelines, and we don't want to lead you to a home that maybe is not going to work for this program. But if you have a home that's in good shape and again has minor things, then you can always go back to the seller and say, hey, you don't have to fix these because they're not on the appraisal, but we want to lower the purchase price because it's going to cost us out of pocket. Right. So that's kind of the way we would work around it on this reverse purchase. Yeah.
Okay. If you're doing a refinance, you can include the cost of repairs. You can get things fixed with the monies that you're getting with your reverse mortgage. So it's a little bit different on the purchase than it is on the refinance. Right.
One last thing I'll add to Ingrid, on the new construction. Okay, there wasn't much of a market for reverse for purchase up until about 5 years ago because we had to have that certificate of occupancy prior to us even moving forward with the application. So now we can do it the same way as if you go into a builder and you 90 days, 120 days out, you enter into contract to buy this home. You can start the process that way, and we can do the loan and application and underwrite the loan prior to the home being certified to occupy. But we do just need the CO, the certificate of occupancy, right at closing before we close. So that's a nice, again, another change FHA and HUD has made that up until 4 or 5 years ago made it a little bit harder for someone to buy a new build, but now makes it a lot easier.
That's wonderful.
Yeah. We'll talk about next the down payment, and this is really the nuts and bolts. So this is where we get into numbers, and we've talked a lot about the benefits and how this can help people, but the calculation is based on the appraised value of the property, which is typically going to be the purchase price, but not always. But we always go off of the appraised value, the age of the youngest homeowner. So if it's a married couple, we go off the age of the youngest spouse. And then it's also going to factor in the current interest rates in today's market. So the rule of thumb in my 12 years that I've been in the business has been the 50-50 rule, meaning most people in that middle range age of 70, let's say, qualify for about 50% loan to value. Well, today the interest rates are a little bit higher, so the loan to value is more 40-60, meaning you can qualify for 40% loan and you'd have to bring in about 60% for the down payment. So those numbers are, again, a little bit more than half of whatever the purchase price is you'd have to put as your total down payment or cash out of pocket. A lot of homeowners who do take advantage of this program, I would say, are the cash buyers that are liquidating a majority of their assets, but now can have an alternative way to buy the home and still feel like they bought the home without cash. They put down just 60% versus 100%, and they keep the other 40% in their pocket. So the acceptable sources for the down payment, that's going to be the proceeds from the departure home. Okay, you sell your home that you're currently living in, you pay that any mortgage off, and you walk away with, let's say, $400,000. You now have that money to put down on the reverse for purchase loan on the new home you're going to get into with the reverse for purchase. Money from any existing assets. You have bank accounts, we have checking, savings, stocks and bonds, IRAs, retirement accounts work just fine as well. And then documented gift funds. This is also very popular with our program because back to the kids as they're wanting to help their parents out, not always necessarily thinking about, what's in it for me. Let's say they know their parents really want to buy this new build, but they're limited to that just 400,000 that they got from selling their home. But maybe they want to buy a little bit more than that. So they need an extra 50,000. Let's say the kids can write a gift letter stating this money we provided our parents is gift funds and we don't need to be repaid. And you can use that as the part of the down payment as well. And it's very common for the reverse mortgage. And just to read another quote, here's another good quote, just to give you an idea of the type of borrowers that we see with the reverse purchase. Janet G, she did this reverse purchase loan, and she says, my husband and I had no idea how easy the process was to complete. Now we live right down the street from our grandkids and get to watch them grow up. Buying a home with the reverse mortgage changed our lives. So really, those are the type of stories that we love to see because it gets the homeowner closer to their kids and grandkids, and they can live the rest of their golden years with their family, which is really how most people want to do it. So that's a great example there by Janet. Right.
Yes.
Yes. Column 1 there, when it says reverse mortgage, that's referring to the home equity conversion mortgage, the FHA or HUD product. The second column, that's the jumbo proprietary reverse mortgage that we've talked about for the younger age 55. And then conventional mortgage, Ingrid is correct, is a forward mortgage that standard mortgage that most people buy with. So the first two columns are going to show that there's a lot of similarities here, that most, as long as they're residential properties, are going to qualify for these programs. We have government insured on both sides, conventional, and the jumbo is more towards the conventional. I'm sorry, but the third column is what I wanted to point out was the loan to value is the main difference here. So if you see on the conventional mortgage, you can obtain a lot higher financing than on a reverse for purchase. So if you are limited to 5% down or 10 or 20% down, you're still going to always look to the forward purchase and get qualified for a traditional mortgage, okay, and a mortgage payment. But the first two columns will show you, like we've talked about, is if you have more for the down payment, you have a lower loan percentage, and you can do the reverse mortgage and not have the monthly mortgage payment. So again, it's primary residence only on the reverse mortgages. You own 100% of the home. So that's one of the biggest elephants in the room or misconception is, when I do the reverse mortgage, I just gave it away to the bank. And that's so far from the truth. It's your name's on title. You're a homeowner, just like you are if you do a forward mortgage, okay? You have all the same benefits of if you want to sell your home down the road, you can do that, okay? But you're always on title, and the bank is just the lien holder, just like with any mortgage. Interest rates, we've touched on that, very similar on both sides, on the reverse mortgage and the conventional. The age qualifying, we've talked about that for the two different reverse mortgage programs. Optional payments, that's the flexibility where we see on the reverse mortgage only, not on conventional. On a conventional, you can't just stop making your payments.
They get really upset if you stop making your payments.
Yeah, they will call you up and they will mail you some stuff in the mail saying we need to be paid immediately. On a reverse mortgage,
get those notices.
It's the other way. You don't ever have to make a payment, but if you do, it's voluntary and it still lowers your loan balance and pays down your interest. Non-recourse, we've talked a little bit about how that is a guaranteed loan that you don't ever have to pay back until you finally move from the property. And FHA will insure the property if it goes upside down or underwater with the loan.
Conventional does not do that.
No.
Yeah.
If all of a sudden your home is worth less and you have to short sale your home, we do all remember the days of short sales and foreclosures. Right. And with a conventional loan, that is something that you do have to be concerned with, is that it is a recourse loan and that you are responsible for the full loan amount, no matter what the value of the property is. So
correct. We saw a lot of that then.
we did way more than we wanted to.
Yeah.
So that would never happen with a reverse mortgage. And I think that's a huge safety factor, particularly for senior citizens, to know that they are never, ever going to lose their home. As long as they pay their taxes and their insurance, their home is there for their lifetime. If they have a monthly distribution that they're taking, that's there for the lifetime. It never goes away. If you're 62 when you get this and you live to be 162, you are still going to get any monthly compensation that you set up initially. And you're never going to owe more than the home is worth.
And then the bottom section there, talking about the closing costs, you'll see that there's an origination fee on all three of these products, and that's the cost that the lender charges to do the loan, essentially. So there's always going to be that involves lender fees, negotiable on all these programs. So again, very competitive. Discount points, they don't allow for discount points on reverse mortgages because the interest rates are set, and you can't buy down the rate, for example, like you can on a conventional. But the rates are very competitive, what's on the going market to conventional. And then the mortgage insurance, that's the biggest piece. So you'll notice on the FHA, the first column there, it has 2% of the purchase price or the appraised value. So that's going to be a large chunk of the closing cost. And when we hear a lot of people who are not willing to do a reverse mortgage or say, I'll do it down the road, the costs are too high. Well, really, this mortgage insurance is that protection that's built in. So why it's a little bit higher in cost is it's going to guarantee you that non-recourse, which is a nice benefit in my mind.
And for your heirs as well. It's a nice benefit for them.
Yeah, and it's not going to be that far off from the total closing costs on a reverse mortgage than if you did an FHA purchase, like a traditional FHA purchase. They're going to have a lot of the same costs.
Well, one of the differences is that you finance when you're doing an FHA forward mortgage, that upfront mortgage insurance becomes part of what you finance.
It's added to the top of the loan.
Right, it's added to the top of the loan. So when you put your 3.5% down, which is what the minimum is for an FHA, you have to send 1 3/4% of that off to FHA right at the get-go. So you really only have 1 3/4% equity in your property then. And it's the same with the reverse, that 2% gets paid to FHA. So that is not a lender's cost. That's a fixed cost that HUD requires, so that they can guarantee the non-recourse aspect of it. But for people to understand, that's not a lender's cost. It's a cost of doing the loan, but it is an FHA required cost. So if you do a forward mortgage, you're usually in a 30-day escrow and you can finish it in 30 days. A reverse mortgage is really very, very similar. The most important thing is to get that HUD education out of the way, because that's our stumbling block. We can't really do anything until that's done. And some of those services are free. Sometimes they'll have a grant where they can cover the cost for the consumer. Other times you're going to have, say, $100 cost to be able to do that. It is a little bit of a lengthy process. I mean, and we always advise that you have a trusted advisor with you when you are doing those counseling sessions as well. So my financial advisor has referred people to us to do a reverse mortgage. When we first sit down with the financial advisor, we sit down with the consumer, and then the consumer can bring whomever they want with them so that everyone hears the same things, because the game of telephone is just like a game of telephone. Things get changed in the translation, but this way we invite and encourage that you have anyone that
the children, right?
Your children.
The children.
I don't know about the kids, but
well, sometimes
I go with my financial advisor before the kids. But yes, you can have whomever you want to be there, and we strongly suggest that you have them there when you're meeting with the head counselor as well. And that's usually a telephone conversation that you do not need to meet in person. But it is, like I said, it's a little bit of a lengthy process. They really want to make certain that any consumer that's choosing to use a reverse mortgage understands all the ins and outs, that they understand the benefits and that they also understand the costs that everything is very clear to them, because it's important that the consumer is totally aware of every aspect of a loan, whether you're doing a forward or a reverse mortgage.
So then you would suggest that someone considering a reverse mortgage in their purchase transaction goes and gets that counseling done. But could they initiate a pre-qualification process with you before the counseling?
They can.
Yeah,
And that's where we would put a quote together for them so they can see all the figures. We actually give them in that quote questions that they might want to ask the head counselor, because sometimes you don't know what to ask. And so it just kind of gives them a guide. But yes, the very first thing, we meet with them, talk about what the program is, and then we immediately in that guide give them a list of counselors that they can go to, and then they can choose to go to whomever they like. Then after they do that counseling session, we get a certificate from the counseling company that usually can take about a week, which is why we say it's important to start that while you're in the pre-approval process. If you're buying a new build or any kind of a home, get that out of the way first so that it doesn't hold you up. You're not waiting on that counseling to schedule an appointment or to get the certificate back, because you really have to have those pieces in place before you can move forward.
Right. Okay, that makes sense. So if I'm working with a buyer and they're are going to weigh the options between a forward mortgage and a reverse mortgage, and you do one of those little examples for them, like we had today. And then you would suggest time frames. So if we were selling their home and it's a pretty good market right now. So if we figured maybe 2 weeks, max 3 weeks for their home to have an accepted contract, then what could we plan on for the reverse mortgage then? Would that be another 45 days?
No, we should be, if they have gotten their counseling out of the way during that time frame, if they're selling their home, we should be able to close that mortgage in 20 to 30 days. You obviously have to get an appraisal. So as soon as you go into escrow, the very first thing we would want to do is get an appraisal ordered on the property, because that could take a little bit of time. But even appraisals, you could pay a rush fee if you needed to close more quickly. But you can actually close a reverse in as little as 20 days.
Back to the time frames we'd love to have them done with their counseling very early, so we can help, when they write the offer, that cooling off period has passed and we can help them start.
When they list. Would be the time to start that process, is when they're listing.
And I've seen it common too, where some people were going to sell their home and maybe their family lives local and they can move into their family's house for 2 or 3 months. And that can really be a nice benefit, especially if they're downsizing and leaving a larger home and they're trying to get rid of a lot of stuff. They can move into their kid's house and then really be active at finding that purchase, and it's not a contingent. So in this chart, what you'll see is conventional on the left side, reverse mortgage on the right. Really, a lot of the similarities are you're going to meet with the loan officer to get pre-qualified and pre-approved. So it's me and Cheryl's job to do a thorough look at their income, verify their assets, where the down payment's coming from. And once we've determined they're pre-approved, again, they get the counseling done early in the process, but then when they're at the offer or counter or contract stage, they're really in the ready position for this loan. And then once it's accepted, we start the application the day the offer is accepted. And that begins the whole processing of order the appraisal, send the file to underwriting, just like with any mortgage. We get to closing, and the only difference there is the repairs have to be completed by the seller. If there are repairs involved, not always there isn't always that involved, but just in case. And then at closing, you sign the final closing documents and the loan funds, and you move in. So really, this chart, we just like to show there are a lot of similarities. It's a similar home buying process. It's not going to take us 3 months versus a conventional taking 1 month. It's everything's about that 20 to 25, 30 day window.
So at what point do the buyers lock their interest rate?
That's a great question. So the reverse mortgage, you're not going to lock your interest rate on this particular program until you get to a fully underwritten and approved loan.
Okay.
So once we're down to basically the last week or two,
Mhm.
so that, if we start the process, we have seen sometimes the interest rates change a little bit, but not enough to really change the pre-qualification,
Mhm.
because again, their property taxes and homeowners insurance is all we need to show that they can pay.
Got it.
So,
Okay.
it might affect the loan term, but we haven't seen that a lot, to be honest with you, even with the volatility in the last year or two. Usually the rate you get on the application is the rate you'll close with, but
Mhm.
we won't know and we won't lock it until the loan's fully approved after the appraisal and we're ready to go to docs. There's sometimes more loan available to the homeowner on the adjustable rate versus the fixed rate. So sometimes that's why the homeowner would choose the adjustable rate, is then it's less money out of their pocket total.
Mhm.
But the fixed rates are very competitive. And again, some people just like the security of the interest rate being fixed.
Yeah.
And so they will come in with a little bit more money if that's required. Again, because the way we determine how much somebody is eligible for, we do have to factor their age, the value of the home, and the interest rate now. So that's a great question. We have both. It's just all about presenting it to the homeowner, what their options are, and letting them choose which one they prefer.
Right. And with a refinance, there are some different benefits
Mhm.
if you have an adjustable rate mortgage versus a fixed rate mortgage. That home equity line of credit
Mhm.
that tends to grow with changes at the same rate as whatever your interest rate is.
Mhm.
So there are just different factors that we would certainly explain with the borrower if they were doing a refinance, why they might choose one over the other. But they have both options, and both are presented to them for them to make the evaluation as to what works best for them.
Okay.
Mhm.
On the forward mortgages, we see a lot of variance in rates between lenders. Is that consistent also with the HECM loans or reverse mortgages?
Not typically, because yeah, all the reverse mortgage lenders, again, know what the rates are being offered. And so this is because this is an FHA insured loan, and the FHA is gonna almost be the one essentially setting the rates.
Mhm.
The lenders can, but if there's only a few lenders that I've seen with rates that weren't really in the ballpark of what the other lenders were. But our company does offer very competitive rates. Mhm.
Can lenders charge higher points? Or are they limited to the 1% for loan origination?
The origination fee, great question, Ingrid, is a HUD calculated charge. So there's a maximum. Nothing can be charged over $6,000. So you'll see that's regulated based on the home value. There's a calculation HUD does, and all the reverse mortgage lenders typically charge the 6,000 is about the standard. Yeah.
Okay, so with the reverse mortgage purchase, most of the fees are pretty well governed,
Mhm.
the lender fees
Right.
anyway.
Yes.
And we use title companies that works, if you're doing, using the reverse product, we use title companies that's their specialty,
Mhm.
because not all title companies specialize in reverse mortgage,
Yes.
just like not all lenders do reverse mortgage. So it's the same type of thing. You want someone who's an expert in the field.
Yes.
Yeah.
Yes, fewer headaches.
Yes.
Yes. Yeah.
The next screen is another comparison, but we had talked about how you can buy more home, that you have more
Yes.
purchasing power. And so they're talking about that you can, if you buy something for cash, you're having to come in with 100% of the purchase price, which limits how much you can buy. You come out of your property, you have $500,000. You want to buy another property. You can't always exchange into a like house at the same dollar amount.
Yeah.
Cool.
And so this is a way to be able to upgrade the home that you're purchasing. So if we look at this, if you're doing paying $500,000 cash, you look at a $500,000 home. But if you use $500,000 and that's 50 or 60% of the home you're buying, Now, all of a sudden, you're living in a $900,000 home versus a $500,000 home. And you still have that same benefit of the taxes transferring over. So,
And no fees.
right. And no payment.
And no
The
payment.
really big one is the no payment. They have to maintain homeowners insurance. You'll see it as hazard insurance, fire insurance, homeowners insurance. It's a general term, but for
Yeah.
anyone to know that whether you're doing forward or reverse, as long as you have a mortgage, you want to make certain that you have homeowners insurance.
Right.
And it really doesn't make any difference if you have a mortgage or not. You always want to have homeowners insurance to ensure that you're protected. The property has to be kept in good condition, whether it's forward or reverse. The lender has a requirement that you maintain the property. They really prefer that you not blow it up as a meth lab. You're not supposed to do illegal things on the property. So they just want to make certain that you keep it in good condition. You do have to live in it as your primary residence, as we talked about, but you could be away from your home for extended periods of time as well, as long as you maintain it as your primary residence. If you do go into assisted living and you're going to be there more than 12 months, or it's a permanent situation, that would be a trigger for having to pay your reverse mortgage off. But as long as it's your primary, you can be there forever. And then for a purchase, any needed home repairs do have to be completed prior to the purchase. Where with a reverse mortgage refinance, that is not the case. And frequently with a forward mortgage, that may not be the case. That's really the only 4 obligations that you have. Pay your taxes, pay your homeowner's insurance, live in the property, keep it in good condition.
Yeah.
So there's 10 easy little steps here.
Yeah. Well, yeah, and this just takes it from the very beginning to the very end, which we've gone through. But to touch on them again, is the very first step is if a realtor.
Come see Kyle or me.
Yes, come see us if you have anybody that you feel has enough down payment for this loan and would benefit from keeping more money in their pocket than buying the home full cash, or somebody that has a whole lot of equity in their home and can sell it and move on to another one. Send them to us. We'll look at their options, and if they are pre-approved, we set them up with a list of counselors and their quote. They talk to the counselor about the numbers, make sure they understand the program thoroughly. In between steps 2 and steps 3, that's when the pre-approval letter would be issued to the realtor, just like on a regular mortgage that they're making an offer to buy on or purchase. And then once the offer is accepted, then we'll go ahead and start the loan application process. So we meet with them. Me and Cheryl would, and help them sign the loan application disclosures, collect any documents. A lot of times, if you do a pre-approval, maybe it was 2 or 3 months ago, we'll just need updated financial documents, things of that nature. We'll order the appraisal, the home's underwritten, or the whole loan is underwritten. And then once it's, we meet the conditions of the loan, that's fully approved, and we're on to signing final loan documents. And then the last 3 steps are similar. It's the loan's gonna fund, and then your home's gonna be in the new homeowner's name.
And the other thing I think that's really important is that we're not going anywhere. So after the purchase, to me, one of the most important aspects of the lender or the real estate agent you choose is that they're still going to be there for you afterward, that you're going to be able to go to them with questions. When you get those tax bills, that you can come to us for those. Because I think the service after the sale is equally important to the service before the sale, if not more. Because things do come up. People, even with transferring taxes, they have to remember all those things take some time.
Right.
So you have to be prepared maybe to pay the taxes on the home that you're purchasing at the purchase price initially, because the counties are behind, and it can take them 6 months a lot of times to get those taxes transferred. So just another little piece, but it is nice to know, for them to know, that afterward we're not going to disappear.
Yeah.
We're going to be there for you, that all you have to do is pick up the phone and call us. You have a problem with servicing, you can call us. So we would like to consider ourselves your lender for life. So any questions you have afterward, we're still going to be there.
Well, I think we've pretty well covered everything, haven't we? We
Good.
mystified the program and debunked a lot of the things that misconceptions.
The myths
Yeah.
around it.
Yes,
Yeah,
that's
there are a lot of myths around it. There's a lot more positives than negatives
Mhm.
with a reverse mortgage. And I think that's what people have to remember is there you go.
There we go.
Let me just save this full screen.
And Kyle's local as well. He's down the
Yeah,
hill.
my-
He's kind of a flatlander, but you know,
Yes.
yeah.
My
Which-
office is down by Sac State, so
Yes.
I'm down there, but I do work in the greater Sacramento area, even up through the foothills, and born and raised in this area, so I know a lot of, grew up in Folsom, very familiar with this area, and again, I've been specializing in reverse mortgages for 12 years, so my contact information's at the bottom there. So anything we can do to help, let us know. We're here for you guys.
All right. Thank you.
Thanks so
Thank
much,
you,
Ingrid.
Ingrid.
You're
Appreciate
welcome.
it.
And again, I'm Ingrid Pierson with Wesley and Associates. I am not Tim Wesley. And my number is 916-709-5626. My office is in Auburn, but I work all Placer County and have listings coming up in Fair Oaks and Citrus Heights right now. So
That's great.
thank you so much for watching and joining us.